following is a paid program. Advice and opinions expressed on the program are solely that of Heiar Insurance, not necessarily WBEV or Good Karma Brands. Welcome in, everybody, to Taking Care of Business. It's a Friday, which means it's Senior Solutions. That means Heiar Insurance, and we have got Matt Heiar with us. Matt, you're looking in a good, positive mood.
Yeah.
It's we're in the midst of the Medicare enrollment period. We're about almost a full month in at this point.
Yes.
I think next Friday is a full month, and you still have all your hair.
Yep.
You don't look like it's like you haven't bathed or shaved in a few days, so you must be doing all right.
Yeah. No, it's going well. Just a chaotic time of year, and a lot of people are getting all these letters and phone calls about, what am I missing out on, and very deceiving. Mm-hmm. But usually, if it's too good to be true, it usually is. Yes, we're counting down to 4 weeks.
Mm-hmm.
No one's counting.
No, it's counting. Right.
But yes, it's so that this is our annual election period, October 15th to December 7th. So we're reviewing people's drug plans, Medicare Advantage plans, or if your Medicare supplement is getting expensive, we're looking at alternative options. So it's just a lot of that. And then, obviously the government.
The government.
A lot of calls on that too. So we are not the government.
No, thankfully.
And people they're signing up for Social Security or Medicare and they're not getting their cards yet, or the application isn't approved right away. It's government. So yes, I say that a lot,
right.
But this time of year, this is when a lot of people end up retiring or going on Social Security or Medicare. So there's slower times automatically.
Right.
So with us being in November, we're already signing up our 1961 babies for Medicare for February 1st start dates.
Right.
So if you are born in 1961, this is the time you're going to start getting all that mail, and that's when it's time to come in and get the government stuff done first.
Right.
Typically in a first appointment, we can talk about plans, but it's more important to get the government stuff done because that's one thing we can't control.
Right. And you can't even do the plans until the government stuff's in place, right?
Correct. We need the Medicare number to even sign you up with anything. So that would be step one. It's just getting that. So that would be in December, which is only a few weeks away. That's when we want to start already signing up our March babies for Medicare that are born in 1961. So just food for thought. We can do the research and go over the plans, but I can at least control that.
Right.
So I can sign you up literally the day before for the next day to start, and you can get policy numbers or temporary, cards. I can actually work with the insurance companies. But with the government, if we don't have that, then we can't do it. So if you are born in December and you haven't signed up for Medicare, you got to get in yesterday.
Yeah.
Because we got to get that going. And we're still having a lot of fun with the government website.
Right.
It's up and it's down and it's up and it's down. And so that's been a little frustrating, but we'll see. We also just entered another enrollment period, the marketplace.
Yeah.
And that's what everyone's been talking about. And it's just crazy because I've been getting calls about people that have been on Medicare for 10 years. And they're like, I'm reading that we're not going to get any help and our insurance is going to be done. And I'm like, no. That's for people that are under 65.
Right.
The Medicare stuff is still how it is. There's no changes in Medicare. Medicare is going to go up like it does every year, and along with our Social Security. So there's no changes. That's just the commercials saying that.
Right.
But the marketplace insurance has been going pretty smoothly.
Okay. I know that was kind of a concern. I mean, with the government shutdown, with potential subsidies not being there.
Yep, and that was the misconception too. A lot of people were like, "Oh, I thought I wasn't going to get a subsidy at all," and it's like, no. It's basically we're going to pre-COVID times where it's like there's a cliff where it's like if you make this much money, you get a subsidy. If you go over it, then you don't. So, yeah, some people that are higher earners and stuff, yeah, they're having to pay the full boat,
right?
And they're like, well, this stinks, that's terrible and stuff, and I agree, but at the same time, we don't have to watch our income now,
right?
So if we want to pull a little bit more from our 401k or we want to work a few more hours, at our part-time job, we don't have to be like, oh, is my insurance going to go up because of it,
right?
Because we're paying the full boat anyway, so. There are positives with it too, but yeah, there's no rhyme or reason to it. I've had a bunch of appointments where I put in their same income as last year, and they're paying less.
Great.
And does that make sense? No, because I was warning them during the whole application, like, yes, our subsidies are projected to be 15 to 20% less, but then they're getting more of a subsidy.
Right.
So I know, and that's why I can't explain it. These are 1-year contracts. So, we just have to pick the best plan for you. They are pretty catastrophic plans,
Right.
which that's fine. I mean, it is what it is. It's just, but this is what we call major medical. It will cover $1 million cancer a year. It will cover $100,000 surgery. So the main thing is, we want to make sure you can go to your doctor because they're HMOs. So you have to stay in network. And that really limits it down. There's 44 plans next year for the marketplace.
Wow. That's not a lot.
Yes.
I mean, it sounds like a lot, but it's also not.
Right. And each carrier has, 9, 10 plans. So that's why, if you go to, this provider, we have to look at their plans.
Right.
It's not, it really narrows it down for us. So basically, we just evaluate affordability, comfort with the plan, and our health, just like we do with Medicare.
Right.
So whatever makes the most sense that we do, that's what we do. But yeah, I was nervous because I didn't know if the income cutoff was going to be 50,000 or 40,000.
Right.
That was the scary part, just the not knowing and the uncertainty of what it's going to be. But pretty standard. If you're within 400% of the poverty level, you will get a tax credit. If you're above it, you don't. If we're right on the line, I almost recommend not taking it.
Right.
Because if the furnace goes out and we have to pull from a 401k, we're going to go over it and we're going to owe that subsidy back.
Right.
But everyone is fearing like tax time. And that's when everything gets rectified. So if you were overpaying $50 a month, you get it back at tax time. If you were underpaying $50 a month, you owe it at tax time.
Right.
And it's not a penalty. You're not kicked off. The IRS isn't showing up at your door. It's just, this is how they fix, they correct it, I should say. So it's not major. And some people call me. They'll call me in March and say, hey, you got to raise it, 10,000 or 5,000. And we do. And then it adjusts your premiums moving forward. So tax time isn't as scary.
Right.
I have other people that are like, you know what? We'll figure it out at tax time. Taxes aren't fun anyway. So,
Right.
so like it's all situational, but yes, you can still get health insurance. There still are subsidies. And I just feel like with this government shutdown, which another week shutdown.
Right. Another week done. Yeah.
Well, they're saying they might vote today, but it's too little too late. I just don't think that, because I've signed up people ever since Saturday.
Right.
So is their premium going to be less now all of a sudden? And maybe that could happen. It's never happened to us before this situation.
Right.
So maybe your plan could get cheaper, potentially. Maybe you could qualify for a tax credit. I just think it's any corrections or changes they're going to do would be for the 27 year.
Right. It almost feels like at this point, yeah, it's almost too late to try and get something implemented and in place, because this window we've got only goes until December 15th.
Yes. I mean, our biggest concern with the shutdown right now is, get the government open before the holidays when everyone's traveling.
Yeah.
It's like they're already cutting down on, the flights and stuff, and that could just be a nightmare.
Yeah.
And like, what is the world thinking right now? Like, they're just probably laughing, like their government can't even, figure it out. And it's like, there's no way to figure it out unless we open the government.
My father-in-law is a retired air traffic controller, so he still keeps in touch with a lot of his buddies in that industry, and a lot of not happy people in that industry because they have to come to work.
Yes.
But boy, oh boy, what a great joy to not only not have a paycheck coming in, but then in many cases, no benefits you can take advantage of, take care of your family during that window.
I mean, and those guys are the true heroes. I mean,
high stress, super high stress.
Well, high stress. There's been a lot of situations like that have gone on the last 5 years, and then we're looking into it like, oh yeah, their technology is so outdated. It's from the 80s. It's
they're basically using floppy disks for stuff.
Yes, and it's like, okay, we're having these problems where they're short staffed, and then it's like, well, let's not pay them.
Right.
It's just getting to the point where it's like, okay, we voted you guys in to do one thing, make laws, agree on things, take things away, add things, and it doesn't help when they're not there. So, and look at with the health insurance, same thing. It's just, we waited too long to make changes, and now it's like, okay, it's looking like next year. I'm not for sure on that. Maybe if they somehow decide and they will add these subsidies to people, I don't know.
You'd love
but
to be proven wrong, but
yes, that would be great. If
history
it
has said it'll probably be next year.
I would love more subsidies because these plans are catastrophic. So, I mean, a lot of people were paying like $0. And I think zero is too expensive for the plan they're getting. It's
Right.
They're like last year they were max out of pockets of like 9,200, or I shouldn't say last year, this year. Next year they're up to like 10,600. Yikes.
Yeah, that's a lot of money. Now, mind you, again, $1 billion cancer year, that's a drop in the bucket. But for somebody who's doctoring very rarely, that's a lot.
It really is. And then it's like, then going over to the retirement side, people are deciding like, you know what, I'll work one more year till I'm 65 where I don't have to deal with that. But the key age is 63 and a half. Because if you're not going to get a government subsidy and the plan's $1,200 a month, it might make sense to take Cobra. We used to laugh at Cobra numbers.
Right.
But Cobra actually is competitive now with these max out of pockets, and it's the continuation of your group insurance. Group insurance tends to have PPOs, which you can go in and out of network.
Right.
So you can keep your doctor, you can travel, you're comfortable with your medications on it. That might make sense. So I think a lot more Cobras coming in, but 63 and a half, Cobra is a federal law where we can have 18 months of the continuation of our coverage. So that could be huge where it's like, all right, I have a goal, 18 months from 65, which would be 63 and a half. I am retiring.
Right.
And then we'll go on Cobra. We don't have to worry about the marketplace and the government open, shut, doesn't matter.
Right.
Unless we're traveling.
Right.
And then we can just actually, move forward and we kind of just skip that process. So, but quality of life, if we're done, we're ready to retire at 62 because that was our plan, then we make it work.
Right. That makes a lot of sense. I do want to remind people, if you have a question for Matt Heiar and you want to ask, by all means, give us a call here on the show. 920-887-9595 is our call and text line, or you can call us at 920-885-4446. I believe we have Ashley up in the studio. We do. Hello, Ashley. And she is waiting for you guys to call in and have your questions answered. I love the fact that you're telling people about this kind of like how you can bridge from working to retirement and kind of, working to Medicare. So a lot of people wouldn't know that. It's something that they don't tell you about, they don't teach you about. And when you're seeing the ads, and I've been seeing a lot of ads recently, maybe it's because I'm watching a lot of old movies on streaming, but it's like, oh, streaming with ads, one of the first ads is going to be for, Medicare plans, or it's going to be for other insurance plans and health insurance, medicine. And all of them are, I don't use the term scary, but they kind of make you feel like if you don't take action right now, you're going to miss out on something big.
Oh yeah, and that's why it's huge to have a financial advisor because you have an income plan. So I ask that a lot. Do you have an income plan? Because then we can be exact. So even if we are teetering the line, your advisor is giving you X amount of dollars per month, where it's like, hey, we know it's a fixed income. We're gonna make it that way.
Right.
So we just have to go back to our strategies now, like with pre-COVID, where if we pull from Roth accounts, that's tax-free income. That doesn't count like it would from like a 401k where that's taxable income. So we just have to go with these strategies. Or someone's going to go on next year, maybe they pull a little bit from their 401k, pay the taxes in this tax year, and then kind of beef up our emergency fund, our checking and savings, and kind of subsidize our income that way. And now we have a debate of, do we turn our Social Security on?
Right.
That's income, and that could make our insurance more expensive. So that's why another way to get around it is just, hey, 63 and a half, we're going to go on Cobra. We like that insurance. It's expensive,
Right.
but if you're not going to get a tax credit, so is the marketplace. And it's really hard to see a group plan that has these high of maximum out of pockets. I mean, we're talking a husband and wife over $20,000 for a maximum out of pocket.
That's insane.
That would be quite the car accident and med flight, and yikes.
Yeah.
So everyone's like, how do we fix it? How do we fix it? We talked about it last week. I mean, it's where do you start?
Right.
And who do you point the finger at? And it's just tough. But I mean, I feel like it should not go over a certain amount of our household income. So your maximum out of pocket, maybe like 10%. So if you make $100,000, like, yes, the worst case scenario is $10,000 out of pocket.
Right.
So if you make 50,000, the worst case scenario is 5,000, because that's where we have to start going after. Is these plans are just very, very high deductible, and that's the worst case scenario. Is people are doctoring a lot.
Right.
So even if you're 62 years old and you're like, I'm retiring, I'll do that Cobra. That'll get us to 63 and a half. That could that still buys us time, where we have less time and we have more time to plan on. Let's beef up our checking and savings. Let's kind of get a plan for 18 months from now too, because that's 2 tax years.
Right.
Where we could kind of not have to worry about income. And we're just trying to bridge a gap to 65. Because then when you turn 65, I don't have to ask you how much you make, how much you're pulling, if you're traveling. And that's what we're trying to get to without wishing our life away.
Now, we talked about this before, and I want to bring this up again because when it comes to that terminology, we talk about that max out of pocket. When people are looking at plans and seeing, and it says like, hey, this plan, it's a $10,000 max out of pocket or whatever, things that don't go towards that max out of pocket are deductible. Right.
So
or can it?
Yeah, that you start with a deductible.
Right.
Right. So if you have a $5,000 deductible and a $10,000 max out of pocket, the first $5,000 is on you.
Right.
Right. So and then we have what we call co-insurance. Pretty common co-insurance nowadays. Now with the marketplace plans is 80-20.
Right. So
you spend $5,000, then you get a $1,000 bill. You'll pay $200, they'll pay $800, all the way up to your max out of pocket. The one thing that doesn't go to max out of pocket is co-pays.
Right. That's right. Okay. And then medications purchased on that plan, does that go towards the max out of pocket?
That is, if it's a copay, it doesn't. But if it's subject to deductible, then yes, that would go towards the annual maximum out of pocket.
And that's where knowing what your meds are, knowing what does qualify, what doesn't qualify. I mean, it's a very complicated thing, which is why, of course, it's understandable that people come to you and don't necessarily know everything about it.
Yeah, I know. So that's why, like, Monday, I was still fresh to the plans.
Right.
So typically we're doing a lot of these appointments over the phone, because they're used to it. If they've been on it 5 years, like, yep, same strategy, the cheapest plan that's copays, because they only go to the doctor once or twice a year. And that hasn't really changed. But yes, that's why someone new to this, they're like, wow, this is eye-opening, and it is making people think twice, if they're not comfortable with that maximum out of pocket. But we almost have to, because there's like a huge jump. Like all of a sudden you're like, hey, what if I did $5,000 out of pocket maximum? Well, then you pay $500 more a month. So that's $6,000 a year. So statistically, mathematically, it would make more sense to be on the
higher,
right. If that plan's $0 a month, I know.
Right.
But it's a lot, and that's why some people, they're comfortable with their plan, they like it, and they're not switching.
Right.
And that's fine, but we have to renew your application. So that's the main thing. So you can give us a call at 920-887-0580, and Jill and Sarah are standing by. So we'll just get you set up, get an appointment going, and kind of show you. But this is one of the biggest investment constraints we have in retirement. People don't realize how much their employer is paying for these premiums.
Right.
Because even when we get to Medicare, Medicare is projected to be over $200 for next year. They're like, I was only paying $80 a check.
Right.
And it's like,
and
wow.
that was for you and your spouse maybe, or you and the family.
Yep. And that's when they get the COBRA paperwork, they're like, whoa, this is a lot. It's like, that's what your employer was paying. It's crazy to think about. But that's why with these insurance premiums going up so much, we need a plan.
Right.
So on paper, we have to make it look like a lower income to get that tax credit. If not, or if we're close, sometimes it's just not even worth taking it, because we can pull as much as we want. And then you go to your advisor, be like, all right, I guess I have to pull $500 more a month because the insurance is more than we expected. But at least we have the peace of mind of you can go get a part-time job for fun. Or if you get an inheritance, it's not a big deal. You win the lottery, we don't have to worry about it.
Right.
So there's pros and cons to it, but the main thing is you have coverage and you're not filing bankruptcy if something major happens.
Now, when it comes to looking at those marketplace plans, I know we talked before that there's different levels. Jokingly so, it goes from lead to diamond, but really it's like what? Bronze, silver, gold?
Yes.
Okay.
The Olympics.
Exactly. And so that could affect, it could be the same. I'm just going to say, it's, medical company A, and they have their 3 tiers of plans. Mm-hmm. And that's why there could be 40 some odd plans out there with so many different carriers, is they might have 3 different tiers. And then that means somebody could have been, with subsidies changed, maybe they were a silver tier last year, they go with a bronze this year to save money.
Yeah, and that's why like everyone is seeing on the internet, like, look how much they're going to spend if they pick a silver plan that from this year to last year. Silver plans are not common.
Right.
So the only time we actually like pick silver plans for people if they hit a certain basically bracket for income. So if you're above Badger Care but you just keep it low enough, I would say it's between $20,000 to $30,000. So it pops up your tax credit. Yay, you get a tax credit. But then it says you may also have extra savings with silver plans. Ooh, what's that?
Right.
So then we actually go into the silver plans, and that's where they adjust the deductibles. They're not $10,000 out of pocket. They might cut them in half. They might cut them in a third.
Right.
So that would be someone that would take a silver plan. If you're on the higher side, closer to not getting a tax credit, the silver plans are just astronomical, super expensive.
Right.
And same with the gold, obviously.
Right.
But for some reason, if you hit this income bracket, silver plans pop up. You might get extra savings with silver plans. So, but no one that doesn't get a tax credit would pick a silver plan.
Right.
Because just doing the math, because I think of everything catastrophic. Hey, worst case scenario this year, you'll be spending $1,000 a month, which is $12,000 a year. Plus, you still have $10,000 out of pocket. It's like that doesn't make sense at all. It's $20,000 when we could pick a bronze plan for $50 a month, which is $600 a year, and have $10,000 out of pocket.
Now, I want to make sure I'm divvying things out as well, because I'm thinking about price. When we have group insurance through an employer, or we continue our COBRA benefits, that's covering us, our spouse, children if we have them in the household, that sort of thing combined. When we go to the Affordable Care Act plans, same thing.
Yeah, you can have dependents, you can have, a husband and wife, you could have a family, absolutely, or single plans.
And then when you move to Medicare, they're like, nope, break it all down, separate it all out.
You are separate entities.
You are suddenly on your own.
Yes. So that's why, when it comes to Medicare plans, it's like, yes, husband and wife could pick separate plans because it's affordability, comfort with the plan, and their health. And they might have different health needs, or drugs might be covered better on one Advantage plans than supplements or the Part D plan. So it's all situational, and that's why it's like you have to go to an independent broker who has multiple companies and multiple plans to show you, rather than that letter you get in the mail from Company X. Right. They're going to show you Company X and Company X only, and this is our opportunity to explore our options, not just limit them to, hey, it's this, or this. What do you like?
Right. Well, and we've talked about that before when it comes to you guys. You guys are that local broker here. You guys do partner with a lot of different people and a lot of different plans so that you can offer everything. You just lay it all out there because it's not cookie cutter. It's not one size fits all, which we're learning from the conversations we're having with you, because it seems like nothing about retirement, healthcare, any of that, retirement planning, none of it is one size fits all.
No, it's not. And that's why we have a team at Heiar Insurance. I can't, because if I did the retirement planning and the Medicare and the marketplace and the estate planning, it's almost like when you go to those restaurants and they have these huge menus. Mm-hmm. It's like, what's their specialty, or do you just make everything pretty decent? Right. And that's why we bring in specialists that, are great at their job, and we surround ourselves with those kind of people. So we can be your one-stop shop of, hey, you need a will or trust, Rob's here, stuff. And if you need retirement planning, we have financial advisors, CFPs on board and stuff. So depending on how intense we have to go, there's a CPA that we work with and stuff like that if we're worried about accounting, unique accounting situations. And then we also, I'm trying right now to get into to get someone in the office that does property and casualty, homeowners, auto. So because that's one of the biggest questions we get, and to me, to try to learn all of these and be okay at it, I don't feel like I'm doing a service to you. I feel like it's a disservice, and that's why we're trying to make it as easy as possible in retirement, where everyone is at our office that you need, for any situation in retirement. And that's what my mom started building in, we're just trying to expand more and more into it. So, yes, we are in attempts right now to work and team up with someone that does, property and casualty, because that's a big thing right now. And everyone's been like, oh, it's going up, or I got dropped, and so just another way to help you out and just have a local advocate, so you can come right to our door and say, what's going on with this, and have someone to talk to, the same person that helped you get that plan.
Right. And I mean, and that is so crucial. You guys, in as much of a capacity as you can, you guys don't just serve as I hate to use this term, but the salesperson for these plans, but you guys strive to be an advocate for those people. You've sat on the phone and waited for somebody on hold just so you can help push things through or ask questions, and and been there on hold with people to make stuff happen.
And we have a lot of do-it-yourselfers. They'll do the due diligence of calling the insurance companies, but I mean, if you come to us, let us do that. That's our situation. You just call us and tell us the situation, or tell us a letter you got, and then we will advise in the best interest of you. And sometimes, with HIPAA laws and, certain Privacy Act stuff, that we need you there.
Right.
But we're more than willing to absolutely call with you and, work out this situation. That's our appreciation of you coming to us, that we're gonna work things out and, fight this thing till the end. So that's why, absolutely, if you have questions about, health, life, retirement, soon to be, some auto and homeowners, just give us a call at 920-887-0580.
So at some point in time, are we going to have to see you guys change the name from just Heiar Insurance, like Heiar Solutions?
Well, we already got the Senior Solutions, but I mean, that's the thing though. Like, you've always had that advocate, like at work and stuff. Everything was taken care of: your life insurance, health insurance, your retirement. So like, and you go to HR, and that's essentially what we're trying to do, is like, instead of having this person over there, this person over there, well, this person retired, so now I got a new person that I don't even know their first name, or they moved, to Madison now, or they closed down, and that's confusing,
right?
And especially for your kids, right? If they have to start helping mom and dad, because we have this like sandwich generation right now, where people are nearing retirement, but they're still taking care of their parents,
right?
And that's a lot. So if we can try to simplify that by just, hey, everything's here. So if you need a question, you call us, and you're going to talk to a human, not a robot. And that's why being born and raised here in this area is so cool, because you're just helping people in the community that you've grown up with.
Right.
So it's just rewarding every day. And it's a little trying times, right, with, just everything that's going on. But yes, if you definitely have any questions about your health insurance, life insurance, retirement, you just give us a call at 920-887-0580.
Absolutely. And I want to remind everybody where you guys are located. You guys are over there at the Heritage Mall.
Yep.
Great location.
Plenty of parking.
Plenty of parking. So much parking. I imagine the parking lot gets a little busy out there this time of year. You get people stopping in and seeing you guys.
Yeah, it's died down a little bit because of Halloween's done.
Mm-hmm. Mm-hmm.
So there's plenty of spots. But yes, it's people come in and they're like, wow, I've never seen the office this busy. And it's just, 'tis the season. Mm-hmm. But yep, we have people working in every office now, just working drug plans, running Medicare Advantage quotes, Med Sup quotes, life insurance, and then some of the retirement reviews we've been doing. And yes, and that's the thing of, you want to go local with this, because every time you're going to just be calling this 1-800 number, talking to who knows who.
Right.
And that can get frustrating, and you don't get the answers that you want.
And I think about the convenience that has to come from the fact that, you can be talking with somebody and go, okay, well, let's look at the plans that are available to you. What's your income? And if they're already doing some stuff with you, you already have that information. You've already talked about some of these things. If they've worked with you for a few years now, it's hey, I want to do some estate planning, and you push them over to Rob Mielek to work on stuff. If he has questions, needs things, it's not let me call this other person, wait for them to get their secretary to get the information to them, for them to look it up, and then to call me back. It could be a couple days. It's you can walk to the office next door and be like, hey, Matt, real quick,
Yep, and that's actually happened quite a bit. Like some of my retirement clients, like I'm working with them. We talk about the estate planning, and I know enough to be dangerous with estate planning, but writing up legal papers, no. That is Rob, 100%. So, but some people feel just we built a morale together. We understand each other. I know their financial picture, and their goals and needs. So I have like sat in on meetings with Rob with them because they felt more comfortable because they didn't know Rob. And then sometimes people are like, no, we can handle this and stuff if we have questions. So yeah, it's all, to your liking, but that's what we're trying to achieve here is like, let's make it simple, right? Life is difficult, and our biggest thing is the anxiety of retirement.
Right.
What do I do? Where do I start? And it's all we can do is step one. Let's start here, right? We're losing insurance. Let's get that. Okay, there's no bridge or gap in insurance, so we bridge that. What's our income plan? Do we have an estate plan? And that's where we just start going down the list. It's not, we can't do everything in one appointment.
Right.
And basically our first appointment is just like education. We're just educating you on like, here's how people typically do it because everyone retires differently. Your self-employment is going to be a lot different than retired from a factory.
Right.
So it's all situational, but that's why we just take it one step at a time and we try to simplify it. So if your kids are wondering like, hey, mom, dad, where's your stuff over here? Or I got this letter in the mail from this company. Who's this from? And we want to consolidate and bring it down to like, have them give us a call and then we'll work it out and stuff. And it's just rewarding because people just appreciate that, people plan for this.
Right.
Because that's the last thing you want to do is leave your kids with debt or dad had bank accounts over here and there's money under the mattress. And it's a lot. And, we all grieve differently, but the grieving process should not be filled with anxiety of what do we do with all this stuff? What's going on with their house? Do we have to sell it? Is the state owed money for it? Is there a lien on it? And that's where it's really, really difficult for a lot of people, but the transparency is huge. If we can all be transparent and have just a one-stop shop where it's like, hey, all right, so what do mom and dad all have here and stuff? And then we just start going down the list, and it really helps the next generation big time.
Right. And I mean, there's an interesting dichotomy too, because you've obviously been in the industry long enough to know when I think about like my grandparents or even my parents, there's a lot of stuff you don't talk about. You don't talk about income. You don't talk about, in some cases you don't talk about who's doctoring what or where, until you get really old and then suddenly that's all you talk about. You don't talk about retirement planning, other than what you're going to do, but not whether or not you're financially going to be able to. And so without that transparency at that level, when they come to you, they're kind of forced to be transparent. Like they kind of have to be in order to really get help.
Yeah. And we always use the analogy of like, my arm's broken, but I don't want an x-ray. And it's like, we can't diagnose something if we don't know the big picture.
Right.
So same with people that come in for retirement planning, but just one spouse, and they're like, well, we keep separate, financials. So my checking account is mine. Can I retire? And it's like, well, I can answer this kind of,
right.
But we live in a marital state. So technically, we need to know what's on the other side. Not saying it has to be part of your income plan.
Right.
But and I do have that. I'm an advisor for some people that just one spouse. And that's fine, but I still have to know the big picture.
Right.
So yeah, it's every situation's different and stuff, but like building that comfort and that trust, that's what we need to work together. So, but we have to just start at step one, right? And that's
right.
the big thing, because people are like, I have questions. They bring in a list, and it's just going across the board of everything.
Right.
And it's like, yes, we can get your answers and stuff, but this is going to take more than one appointment.
Well, and in some cases, that more than one appointment is also required because certain things, like for legal reasons or whatever, for licensing reasons, have to be talked about separately.
Oh,
right?
Absolutely.
So that's kind of an important thing for people to understand as well. I want to talk a little bit more about that first step because we've talked about this before. You've got that login, that login.gov, I believe it is.
Yep.
That is so critical and crucial right now for everything government related.
Yes. So that's on Social Security's website, ssa.gov. It used to be username, password, we're in. All right, let's do it.
Easy, go.
Those were the good old days 3 years ago. But now we have to use login.gov or ID me. And basically they're universal government websites, but they're third parties. They're not the government.
Right.
So that's why when you call Social Security saying, hey, I can't get in, they're like, you got to call them. It's a third party.
Right.
great deflection. So we go nowhere. I'm assuming those hold times are probably pretty ridiculous right now. But yeah, with this whole introduction of the AI and taking selfies and taking pictures of your driver's license, if that doesn't work, you have to go to the post office and have a federal worker actually verify you as a human being. It's a lot more work, but like we need that account. That is like the start. Once again, we can't control the government stuff,
Right.
but it would be nice to know, like, what is your Social Security going to be? You know, it's that when are we turning it on?
Right.
And it shows charts, and it's just so powerful. Or if we have to sign you up for Medicare, that's how we sign you up for Medicare. So I'm asking people to give it a shot, you know, or ask the kids to come over, you know.
Right. Have them give you a hand.
I'm getting to the point where I have to ask my oldest son some things, you know, like, hey, how do we do this again? And it's frustrating, but like they flipped the switch. They ripped off the Band-Aid and said, hey, we're going full technology right now.
Right.
Which is fine, but it's just we need that to start the process. And it's just if we don't know, because we're so used to getting these Social Security statements.
Right.
It's 62, 63, 64, 65, and it just says a number. But if that's from 2 years ago, there could have been a couple cost of living increases. With the actual on the website of login.gov, we can actually see, like, what about February?
Right.
What about March? And the numbers are spot on almost. So that's why it's just so powerful, you know, to use that platform. But getting into it is tough. You know, so you need an email. You need an email to set this account up.
Right.
One thing we're running into is a lot of couples share an email.
That won't work.
Yes. And I'm like, well, you have a smartphone. You have an email on your phone. They're like, no. And it's like, yes, if you have a smartphone, you have an email. They probably set you one up and you didn't even know about it. So, and they're like, well, I don't get emails there. That's fine. This is essentially your username. So that's step one. And then we have to be able to receive text messages. That's another one. We need our driver's license. Our driver's license has to be spot on name. Like I can't have Matt Heiar. I have to have Matthew Heiar. That's a big one. My mom had the problem with Medicare with Sandy and Sandra. Because it's
so crazy, but I get it.
Well, all it is a supercomputer just basically running these different processes of like looking at the credit bureau, looking at the DMV. You know, so if there's discrepancies, they just boot you out. They're like, it's not happening. And then what do?
Right.
We're stuck. So that's why if you have that account, then we can kind of hit the ground running. But that's where, you know, just give us a call at 920-887-0580. It's been very frustrating, but once we get it up and going, we're good to go then.
Right.
You know, so we tried to create emails for people, but they're so new that they're not recognizing that email to that name.
Right.
So it's been, yeah, and then people with landlines, that's another thing where they're like, I don't have a landline anymore. It's like, I was like, watch this. And I type in their landline number, and it verifies their number.
Right.
But that number doesn't exist anymore.
Right. So they can't take a call or get a notification to that number because.
Yes.
Yeah.
Oh, it's been crazy. I've had people, the husband or wife went home, and then it called their landline, and they gave us the number, and we completed the account. I mean, we've had to jump through some hoops, so that's why giving it a shot, giving it an attempt, starting the process, anything is just valuable to us because so many people come in with retirement, have all these questions and concerns and anxieties, and it's like to address those, we need that. We need to start with that.
Right. So at the very least, those 1961 babies out there who are looking at next year hitting that retirement age and wanting to retire, if you're bored and have nothing else going on right now and you want to be productive and do something interesting, getting out there, SSA.gov, get that login created if you don't already have one. Make sure, and if you do have one, make sure you know what the logins are.
Yeah, I mean, look at you, Ninja. You said you went.
I set mine up, yeah, and you know it was fairly easy. I had to go through the same hoops that you had to go through with everybody to get signed up, but you know once I was confirmed and good to go, then yeah, I could see all my information already now. And I signed up at 41.
Yes, you are very far away from Social Security. You're 19 years away.
Exactly.
Or 21 years away from Social Security. But it's just nice to start planning and, you know, to have that. And it's pretty cool to see, like your earnings history and stuff like that. And
yeah, I mean, it's way more detailed, and I'm looking back and going, oh, that's right, I had a really good year this year, you know, and whatever. And It's crazy, but that's just one step ahead of the game. So
Absolutely.
if
That's
I have
why.
to come see you at some point in time, we'll be ready.
Yeah, and that's why even 1961, you definitely have to be going on it right now because we're going to be 65 coming up in 26. But like, if you're 60, do it. If you're 59, do it. And I know, like, obviously we're going to have a demographic of people coming in that are more technologically advanced.
Right.
Right. Like before, when I first started, people were like, an email. What's an email?
Right.
It's like, oh boy,
Yeah.
we're gonna have some issues here. But and even with the marketplace insurance, we need an email. They have to verify an email. So it's a lot. I understand and stuff, but like if you could, get someone to help you out. I wonder if they do it at the senior center. I don't know if the ADRC does it either, but just having an advocate because. Especially this time of year, we're so booked up, with seeing these people, and it makes me feel terrible. Like we try and try and try, then we're booted out because we tried too many times, and then we got nothing accomplished.
Right.
We can look at plans, but until we have that Medicare number, we can't really do anything.
Right.
So it would just be a great service if everyone could give it a shot. If you feel like swearing at the computer, it will be there, but that's one of the steps that that really helps us moving forward.
It makes a lot of sense to me, and I highly recommend it just for if you're out there listening, if you're my age or even younger, and you just want something to look at and kind of get an idea, and maybe you're a fan of numbers, maybe you need something to drive you to get that salary up and put a little more away. It's an eye opener.
Yes,
and well worth looking into.
Because like what we've been running into now is people with older accounts. They're like, oh, yeah, I got an account on Social Security's website. And technically they did.
Right.
But as of January 1st of this year, they said no more username and login or username and password. So you don't have an account.
Right.
We're starting from scratch. And that's where it's like, well, you did have an account. So if it's not using login.gov or ID Me, those are the two ones. And I get the overall purpose of this. The government's trying to make a universal login. So if you want to go on the DMV's website, the IRS website, the Social Security website, you can use that same universal login. Great idea. Still has some kinks in it.
Right. As with anything government, sometimes the best ideas come with a lot of bad implementation.
Yeah, like if they would have started this in January, that would have been so much easier. You're right. It just wouldn't have been as crazy, but they rolled it out about 2 months ago, right before enrollment period, and that's tough because there's been a couple where it's like we don't know what's wrong. The name's right on their ID, their phone number is connecting and stuff, and it won't let it happen. So they had to physically call Social Security, watch paint dry, and sit on hold for 70 minutes to set a phone appointment up.
Right.
And that's fine. That's an option we can do, but typically phone appointments are 2 to 3 months out.
Right, which if you're looking at, if you waited too long and you're supposed to be retiring in a month, 2 months, turning 65, want to get that Medicare going here soon, puts a kink in a lot of that.
Yes, but if you're already on Medicare, you already have Social Security going, that's perfect. If like your med sup is getting too high and you're wondering what all these commercials are, we can definitely have a chat because mathematically it's going to make sense to go to one of these Advantage plans.
Right.
So just give us a call at 920-887-0580.
Well, Matt, we're hitting the end of our show here, which happens every Friday, and we got to send you about and on your way for the weekend. I did want to ask you, no Packers on Sunday, Packers on Monday.
Yes.
I'm not even going to ask you what you thought of last Sunday's game, but what are your thoughts looking forward into the next one?
Well, a little nervous after the display we had, but and also nervous that the last time we played this team, they kind of kicked us in the dirt pretty good. So. We need a bounce back game. I think we can do it. We have the talent. It's just we gotta put it all together and play a full game. Actually,
I've got high hopes only based on the fact that every time they tell us it's gonna be a challenge, we do well.
Yeah, true.
So that's what I'm gonna base it on. If I had $1 to bet on the game, I think 90 cents of it would go to us.
All right.
So well worth the bet. But if you want to do something more productive with your money, or if you want to look at Medicare, if you want to look at the Affordable Care Act, if you want to look at retirement. If you want to talk to somebody who can help you get in touch with somebody when it comes to estate planning, all of that, Heiar Insurance has got you covered, and then some. And of course, 920-887-0580, right there at the Heritage Mall, open from 9 till noon, and then 1 to 5 Monday through Friday.
Yep.
Perfect. Sounds great. I guess the only thing left to do is remind everybody.
When you want to retire.
Call Heiar. This has been a paid program. The advice and opinions expressed on the program are solely that of Heiar Insurance, not necessarily WBEV and Good Karma Brands.